Hello, 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 hello. Welcome to Audit in 100 pages. So this is we'll be quickly revising from the last lecture we did essay. We have done SQC 1, we have done essay 200. This one we'll be doing essay 210. Now what does essay 210 talk about? Essay 210 talks about agreeing to the terms of audit engagement. Now what happens before you enter into an audit with the client, that is what you call an audit engagement, there are some terms that you both agree on. There are two things. Either there is initial audit engagement. What does initial audit engagement means? You are auditing the client for the first time. Therefore, it is an initial audit engagement. That is, it is the first time. So, if it is an initial audit engagement and there are limitations set by the management, so there are some terms that you both agree on. However, if the management has set limitations, if the answer is yes, then you do not accept the audit engagement. That is, you do not accept the audit engagement unless required by law. If you think that the limitations posed by the management, they are not reasonable, they are not justifiable, then you do not need to accept the audit unless the law says that you have to. Okay. However, if there are no limitations by the management, if there are no limitations by the management, you have to check existence of some preconditions. That is what FRF is applicable, whether the FRF applicable has been followed. Then the management has to agree that it is their responsibility to prepare financial statements and implementation of IC. What is your IC? That is your internal control. So the management has to agree that it is their responsibility with reference to financial statements preparation and internal control. Your third is they have to provide auditor access to all relevant information. So see, when you're doing a marriage, what we say is saath fere, and you have to take some promises also. So these are the promises before starting an audit engagement. Key, all of these are your promises. Do not you will not go against them in the future. So provide auditor access to all relevant information and additional information requested by auditor. You will have to provide the auditor any information, any additional information that the auditor will ask. These are the conditions that they have set forth. If these conditions exist, that is, if everything is okay, you will accept the audit. However, if they do not exist, you will have to discuss with management that what should be done. However, you will not accept the audit. In some cases, you will not accept the audit if there is unacceptable financial reporting framework. That is, the financial reporting framework that is being followed is wrong. Or management does not agree with the responsibilities. Which responsibilities are we talking about? Responsibility with regards to financial statements preparation and internal control implementation. If the management does not agree with these responsibilities, then you do not have to accept the audit. Okay. This was your initial audit engagement. That is when you are doing the audit of the client for the first time. This means last audit period you had not audited this client. It is the first time you are auditing this client. So you will enter into initial audit engagement. However, if there is a recurring audit engagement, so last audit period also you had audited this client, and this audit period also you are auditing the client, then it is a recurring audit engagement. So in recurring audit engagement, what will you have to do? You will have to determine, do we have to revise the already existing terms that we had in the last engagement? Is there anything to revise? And is there anything to remind them? Do you have to remind the client something, these terms and conditions, these terms we had entered into? If yes, if you think that all of these have to be done or any of these have to be done, you will have to send a new engagement letter. If you feel that they are not required, then you don't have to send an engagement letter, clean and simple. Okay, now circumstances requiring revision of audit engagement terms. This is your this point. This first point. When do you think there are circumstances requiring revision of audit engagement terms? When it might happen? First is that the entity has misunderstood the objectives and scope of audit itself. They have not understood only why the audit was done. Some miscommunication was there. So in this case, you might have to revise the audit engagement terms. Your second is if the revised or special audit engagement terms. That is, if any changes needs to be done, or if it is a special audit, then there will be different terms. Third is significant change in either ownership, nature, size of entity, or any legal or statutory requirements. Since ownership has changed, what this has happened, that suppose the client has been sold, or there's a merger, or there's a reverse merger, whatever reason the ownership has changed. In that case, you will have to revise the engagement terms if the nature and size of entity has changed. Suppose the entity has acquired a huge company. Now the nature, time and extent that we had agreed upon earlier, these will have to increase. Understood? So in all these cases, and if any laws or any new legal statutory requirements are there, so I will have to check those also. The auditor will have to check new regulatory requirements. So all of these will affect your terms of the audit engagement. If the management requests for change in terms during audit engagement, remember during, that is, you have already started the audit, but the manager during the audit says ki, I have to change some terms. Are you okay with that? If the auditor feels that it is reasonable and that the level of assurance of his work will only increase, only then, if the auditor is satisfied, he will record a new engagement terms in the new letter. That is, he will agree to the change in audit terms. However, if the auditor is not satisfied, if the auditor feels that this change in terms that we are doing, this will restrict my scope of work, or it will have any adverse effect, in such a case, auditor need not accept the changes. And if the management does not permit the auditor to continue, so auditor said, no, I am not accepting these conditions. If the management then says, okay, then you can leave, thank you, then the auditor can withdraw and report to the appropriate authority. That is, he will have to complain ki, oh, this person changed the audit engagement terms midway, and he didn't even let me complete the audit. So you will have to report to the appropriate authority. So this you can remember in two parts. First is your initial audit engagement and your recurring audit engagement. When do you have to send them new terms? When circumstances are there that you will have to revise engagement terms, so those points are there. And then when the management changes the engagement terms mid audit, this is your, all you need to know.